Hey, good morning. Nick Inman here from VolumeProfileTrader.com on Wednesday, April 18th. And last night I didn't make a video. Hopefully you chose to not get all hyped up about the market because, like I said in Monday night's video, it's still all about the dollar, and the dollar continues to trade in this tight range, waiting for a breakout one way or the other. Tomorrow you have the long-term Spanish bond auction. That is going to be the catalyst, in my opinion, that's going to move the markets, which means the dollar, gold, the euro, S&P, all the markets, global markets. It's going to move them, and you have to be prepared for that. And it looks like this dollar wants to break out to the upside, which means you want to be holding more dollars than, in my opinion, anything else. And that's just how I feel. You're going off the point of control for the year. You're going off the 50-day moving average. You're going off the 150-day moving average. Even the 200 trending higher. This is one of those circumstances where it's going to be right to be long dollars and basically short everything else. So you look at the dollar here on the weekly chart, and you can see pretty much these recent highs or so has been, it's a pretty key level, and there's been a lot of action here. But from there, if this thing gets going, which in my opinion I think it will, we're going back up to this 88, 89 level, which, let me zoom out so you can see, is an important level in the US dollar. So you can see right now on the dollar, we're at a key moment, and if it breaks up to the upside, we're gonna go, and we're gonna go for a while, which probably means you want to sell most of your holdings, or I should say reduce them dramatically, because you'll probably be able to buy them back lower. Let me give you an example of what looks like it's about to break. The euro, yes, let me zoom in. Yes, it's still holding this support level, but it can't even get back up to the top half of the range. We're just trading on the bottom end of the range. That's not good, and that's going to most likely bring more selling pressure to the euro. I think this is setting everyone up for a, hey, let's get out of the way, and let's watch these Spanish bond auctions fail in terms of they're not going to sell as much as they need to, and the yield's going to rise. So just be careful there. Gold kind of looks like the euro, which is a little concerning if you're long gold, and I am. What I'm looking to do is to scale down on my position, just because, over the next, if you look at it over the next, say, year, let's see if I can get the right chart. Alright, there's really no reason why gold can't come back down to sub 1500 and, test those levels. Even, potentially, of course, even sub 1500, around 1400, where I think it would just be an opportunity to get long for the longer term. So, not saying that will happen, it may not, but the way the dollar looks, the US dollar, it just looks like something that you want to be long in anticipation of a breakout. And if it breaks out, which I do suspect it will, you're going to want to reduce your positions in the S&P, as the S&P is pretty much doing, it looks similar to the euro in one way. And what I mean by that is it was trading in the top half of the range. It broke down, and now we can't get back to the top half of the range. So even on this slight weakness today, -5 on the S&Ps, I think in any strength you look to scale out of any positions, especially if they're, on the phase of not working. Okay, Medifast, this is a name that I took profits in yesterday. around $20. It was less than that, but I think it was 19 $19 and 90 cents, something like that, and it ended up getting as high as 2062, closed at 2024. So a little bit of volatility in this name. You're at the value area high for the year. You're also at a psychological level, $20. And one thing that I just slapped on, which I really do rarely, is the retracements, Fibonacci's. The 50% is right at $20. So that was kind of one of my reasons for scaling down. You've had a name that's had a pretty nice pop from uh, basically sub 18 to $20 plus. Let's call it a 10% move or so. That's a good move, and it's probably worth taking some off the table. You also have an inverse head and shoulders pattern, and as far as a price target for that, it would lead you up to 23. So I sold the majority of my position yesterday, but I still hold it with maybe expectations that I can add on any type of pullback, or just participate for a continuation up towards the low to mid 20s. CSX, they announced earnings yesterday, and originally it was trading up about $1 after hours, and sure enough, it's kind of right back down to break even. So that's just something to be aware of. But overall, it was their best first quarter ever, and that's just something to be aware of. So maybe this is something that you still think works, or maybe it's still something you want to own, despite the market that may be correcting significantly over the next couple of weeks, months, whatever. But I would recommend keeping a placeholder position in this at least, which means 1/4 of a position size. Therefore, you can give it some room. If it gets beat down with the market, you have the opportunity to buy a company that's working fundamentally and to add on to that position. Hewlett Packard gave you a bounce off of this point of control for the year, basically the lower end of the range, and it's just something to watch. You kind of just watch this box, or and see which way it goes. Wouldn't be surprised if it came back down, but overall, I do think that there's nothing wrong with having exposure here. IBM announced earnings, kind of trading off. I don't necessarily know what the earnings. Well, I know they earned $2.78 a share, but I don't really follow IBM fundamentally. I missed the trade, and that's just kind of how I see it. And what you're looking at is a stock that may be short-term topping out. Let me see if I can zoom back out so you can see. Maybe topping out. I'd be if I'm long, I would be taking profits, and that's just how I feel. Intel, another one, reported earnings 26, right under 27. You have big time support though, so just be aware of that. However, they announced a decent quarter, and they just have a little bit of inventory back up. But if they do accomplish the goal of basically getting exposure in the mobile industry, this stock, I'm assuming, is undervalued and has a lot more to go, probably in the mid-30s, to say the least. So just something to be aware of. Maybe this is something you want to buy at sub 27, but I would just stay away from now. And last one, Yahoo. Still in this pretty tight range, and maybe you have a higher low here and it wants to blast off and break out. You can draw it however you want, but we kind of have some lower lows, lower highs, and trading up against all of the moving averages, which have been going sideways for forever. You have $15. I think you can trade off of that level, just because it's the point of control for the year. Maybe it trades back up to 16. If it gets up to 16, it's probably a breakout. and you probably have an opportunity to get long, or stay long, I should say, with the move up to maybe 18 or 19. So, anyways, kind of short, but sticking with the theme, which is watch the dollar, as it does what it's going to do, and maybe another thing you want to watch is the VIX. It did bounce off the level we talked about Monday night, 50-day, lower end of the range, closed up much higher than basically where it opened, or I'm sorry, much higher than its lows. So just be careful, and that's the main point. And if you have too much exposure to the market, realize at this point you're still at the end of the day at the top end of the range. You're 20 points from, you're less than 2% away from 1400 on the S&P. And we've seen this move. Unless if you're buying in the top half of this range, you should be profitable on pretty much any trade, and that's just something to be aware of. So take care, have a good morning, talk to you later.